Welcome to Business SOS. This is Rich Sierra, President of the Florida Small Business Legal Center. This is episode 62 of Business SOS. Very excited as we continue providing you great content every week about business law and how to give you tips and how to face the legal challenges that most likely you're facing in your business. And I've gone to a variety of topics in the last year, actually over a year now, going from contracts, litigations, buying and selling businesses, franchises. We had various guests. And next week, I'm very excited. We're going to have a guest. We're going to have L.A. Perkins. She is an intellectual property attorney who wrote a book on intellectual property and trademarks. And so I'm very excited to have her here next week. So looking forward to next week's episode. So today, episode 62, we're going on the importance of the due diligence when buying a business. And if you have listened to my podcast weekly basis, you know I talk about some of the topics. They don't repeat themselves, but they're very common themes. And again, business law has a variety of, it's a spectrum, but there's some common topics that I like to talk about simply because they're relevant, but also that it is unlikely somebody that perhaps listened to my podcast for the first time is going to go back to the old episodes, say a year ago or 6 months ago. So, but I try to make, vary the topic and vary the subject and go perhaps a little deeper into the subject matter if you listened to me previously. So today, again, why it's important, if you're buying a business, why it's important to have a due diligence. And it is extremely important. And I'll give you a couple of points. Number one, you want to verify the seller's representation. If you go to various websites that have listings for businesses, you have, annual sales, you have your profits, they give you kind of a snapshot of what the business is doing. They don't give you all the financials. It's simply kind of the picture to make you interested in that business. And again, if it's a listing, very likely it's going to have the best possible light to see if you're interested in making that phone call and get more information. So that is just simply one representation. But we want to verify the information that the seller is representing. Why the seller is selling the business, the annual sales, profit, losses, and the due diligence process allows you to go under the hood, so to speak, and really get that information that otherwise you're not going to get from a listing. Number two, to confirm that what you're paying for the business is consistent with the value of the business. And business valuation is a different conversation, as I said before, but say it's a business is saying is annual sales $1 million a year sales they're doing, and then they're trying to sell it for, say, $1.2 million, for example. I'm just using that as an example just to make the point here. And you want to verify that at the very minimum they're actually, what they're representing to you, that they're actually generating over $1 million in sales per year. It is accurate. And that is part of the due diligence process. And another reason why you want to have the proper due diligence is you don't want to inherit undisclosed debts. So part of the due diligence includes, and I'm going to go through some of the items that goes into due diligence, are, the understanding the financial aspect of it, the sales portion of it, the revenue generating portion of it, but also understanding the debt portion of it. How much that business debt is, how much debt is that business carrying, and in terms of the overhead. So, and also you want to find out whether there are any type of undisclosed debts. And I'll give you an example. What happens if they have a loan and they have a lien or a UCC1 placed and you don't bother looking for that? And all of a sudden you basically buy the assets of this business and they have a secured creditor that is saying, hey, we have this lien. Guess what? You bought collateralized assets. You got to pay us the money. That's why due diligence is very important, because you're going to have warranties and representations made by the seller that there are no debts. So it's a two-part process. You want the seller telling you that there are no debts in the business, there's no liens, there's nothing that has not been disclosed to you. At the same time, you want to verify that information to the best that you can get it through public records, asking, financials from the accountant. You want to basically do your due diligence, and I'm using the word due diligence a lot through this morning because it's so important. But it's also something important enough that my recommendation is to hire an attorney who has done this before, to assist you with this. This is not something that I recommend you do on your own, simply because it is complex. And if you have not done this before, very likely you will miss something that is very important, and you end up paying for something that later on is going to cost you because it's not what you really intended to buy in the first place. And if you would have known this piece of information, very likely you would have not bought it. So that's why I want to make sure that you understand, why it's important to have the proper due diligence. Now, what documents you should ask for when you're conducting due diligence? Let's go right into it. And again, I've mentioned before that I do have a due diligence checklist available. It is the one that I use when I'm representing buyers. And if by any chance you want a copy of that list, just send me an email at rich@richsierra.com, and I'll send you my due diligence checklist. You can use it any way you want to, but I give you a list. And again, may not apply to your situation, but it's a very comprehensive list of things that I think that should be asked when you're doing a purchase of a business. It's the one that I use, and I add some things depending on the business that my client might be buying. But for the most part, it's a good broader list that will help you and give you some guidance. And again, every situation is different, but if you want that list, just send me an email, rich@richsierra.com, and I'm happy to send it to you. So one of the things that you should definitely ask for are corporate records. And in Florida, you can actually get some of those records through sunbiz.org. It's sunbiz.org. So if you're going to buy a business, whether it's a stock purchase or an asset purchase, something you can do is go, even before you actually sign a letter of intent, and we'll go over that in a second, is you can go online and say, what's the name of the company? You're talking to a business broker, and they say they want to sign an NDA. Say, listen, what is the name of the company? I just want to look it up for a few minutes. And you can go into sunbiz.org, and you can look at the history of the corporate filings that that company filed. Okay, you'll see the articles of, if it's a corporation, you'll have the articles of incorporation. If it's an LLC, you'll see the articles of organization. You'll see any amendments to those articles, whether officers were changed, whether anybody resigned. You'll see the annual reports that we're required to file every year with the state. And so you'll see the history, whether or not they skipped a year. Sometimes people forget, and then they just don't file the annual report and cost them a little bit more money to refile it later on after the deadline. Do you want to find out if the company perhaps was deactivated or administratively dissolved? And that could happen. There are a number of ways. By not filing the annual report on time, and then in September of every year, if the company does not file the annual report, very likely the company will be administratively dissolved by the state. A worst case scenario for you or for the seller is if the company is no longer active, which can happen. They've been operating, working through this company, through this entity, and then all of a sudden the actual entity gets dissolved or gets administratively dissolved. Then you have a situation where then they have to reactivate it, because then it's sole proprietorship. So it is important to, at the very least, double check the actual status of the company. And again, you can do that by going to sunbiz.org and getting that information. Something that you will also be asking for, which is not in Sunbiz, is the bylaws of the company. If there's a partnership, find out where they have bylaws. Sometimes they have partners and there's no bylaws, but ask for them. Minutes of any meetings. A lot of small companies do not have minutes, but ask for them. So we have a list here regarding corporate records. Um, I will definitely ask for the financials, and I'm going to spend some time on the financials because they're very important. Again, this is not a comprehensive list, but it gives you some guidance in what to ask for if you're in a situation that you need to ask for these documents, or if you're selling your business. And I'm focusing more on the buyer perspective, but if you're selling your business, you have to make sure that you have these documents readily available. And because they're going to evaluate you, they're going to judge you, so to speak. If you're going to be selling your business and you don't have these documents ready, the buyer is going to lose confidence in you. And you don't want that. So if you're selling your business, get these things ready beforehand. So when they ask for them, here they are. And that's going to bring the buyer some confidence, like, you know what, this seller, this person really planned for this and has it ready, so I feel comfortable that if this, individual was able to provide me these documents, he's probably running a good business. So you want to make sure that have this ready beforehand before you actually list the company for sale or begin to engage into a conversation with a prospective buyer buying your business. So let's talk about financials for a few minutes. The financials will last for at least 3 years, depending of the type of business you're buying. If it's a stock purchase that you're buying, or you're buying the entity, you're stepping into the seller's shoes, then I will go 5 years. I will go longer, simply because that you might inherit some issues with the IRS, some tax issues that can go back 7 years. So it's a longer due diligence, more in-depth due diligence period if you are buying the entity itself. If it's an asset purchase, on the other hand, the due diligence can be a little shorter. And if you need more information, you can always go back another year. So I like to ask for 3 years, depending on the business, but let's start with 3 years in this case. That's usually 2 years is readily available. Depending on the year or the time that you're asking for this information, you might run a situation that tax returns might be in an extension, so you might not have the current year tax returns or the year that is due. You might have the preceding 2 years. So definitely I would ask for the federal tax returns, including all the attachments, all the exhibits. Okay, not just the first page. For the last 3 years, if they file state tax returns, if they're not a sub-S, they file state tax returns, I would ask for those as well. If they're in a business that is a retail business, which collects sales tax, I would ask for the sales tax returns that they file with the state of Florida every quarter. And the reason it's important because that's actually a very accurate picture of the sales that are coming in, because you got to collect sales tax and pay it to the state. Some businesses, like service businesses, for example, may not collect sales tax, so you might not have that type of tax return. But in the case of a retail business, very likely, or a restaurant, very likely they do have to file state tax returns, and those returns have to be, they can provide them to you so you see what the sales are. Payroll tax returns, and here is very important. Okay, so you want to know how many employees they have and whether they're paying them as W-2 employees or 1099s. And I had a conversation about whether employees versus independent contractors. And maybe I'll revisit that at some point. But if they have employees, for sake of argument, want to make sure that they're paying their payroll taxes to the IRS and also to the state of Florida. So there's 941 quarterly reports that they file to the IRS, and there's the R6 reports that are filed with the state of Florida. So you want to make sure that you get that information as well. Just thought about one more item that I'm going to mention as well. Okay. You want to have profit and loss and balance sheets for the last 3 years, but also for the current year as well, up to the time that you signed the LOI. And then you're going to supplement that at the time of closing. So you want to get that information, and every month, P&Ls that are prepared. I like to see an accountant or CPA certification. So who prepared those documents are very important. If the documents are prepared by the business owner and nothing wrong with it, it's going to have a different weight that if it's prepared by a CPA or an accountant. So prepared by an accounting firm, and they go through they do the bookkeeping, they reconcile the books every month, they prepare the balance sheets, they prepare the profit and loss statements. That gives you, from the buyer perspective, that gives you more confidence that if it's something prepared by the business owner. So unless the business owner is an accountant or has done this before, when I see documents coming in from when I'm representing buyers, and I see financials coming in from the accounting firm, it gives me more confidence in terms of telling my client, listen, these are documents prepared by the accounting firm, and the accounting firm is not going to create something that is fraudulent or false. They're going to basically get the information. If they actually do the actual bookkeeping, the bookkeeping is going to be accurate for the most part, because they're basically, it is backed up by receipts, it's backed up by documentation. You want to get that information to tell you how the business is doing. And you also want to find out how the business is doing currently. Not what it did up to December 31st and last year. What was the last quarter like? What are the sales currently? So you want to find that information as well. What are the expenses? And what is the profit margin that the business is making? Bank statements. I would ask for the bank statements for the last 3 years of all the accounts. And very likely you'll have signed an NDA for all these, by the way. So that's standard procedure. And so the bank statements are very important because it'll tell you the cash flow of the business. How much money is coming in, how much money is going out. How the money is being paid, what the sales are generated. Are they credit card sales? Is it cash business? Is it checks? Is it debit cards? Is it Zelle? How is it that this business is generating the funds to run that business? The bank statement will tell you that. You also got to find out from the business owner whether he or she is receiving money for sales directly to his or her personal account through a Zelle. A lot of service businesses now, it's very common that sales sell me the money or Venmo me the money, and then they use their personal account for that, and then that money may never make it to the business account. You want to find out about that. So and that's part of the due diligence process, asking those questions. So the bank statements are very important, but I also like to ask for the merchant account statements. And that's merchant account statements, whether they use Stripe, PayPal, or any other merchant, that will give you an idea of the sales are coming in, what percentage of the whole pie of sales are coming through this particular merchant or a number of merchants. You can have more than one. Also, whether they're returns or chargebacks, that's important to know, and the merchant statement will tell you that. Also, what percentage of the incoming revenue is taken from the merchant, from the actual merchant. So when the business accepts credit card, as you probably know, if it says $100 sale, you're not going to receive $100 from that merchant. You can receive perhaps 98, and I'm using that as an example. And it's a percentage of that is not going to the actual merchant. For the use of their platform, you'll have to pay. The consumer will basically be charged that amount, but you as the merchant will receive less, and that's just the cost of doing business. To the way it works. Otherwise, you're not going to accept credit cards. But having that merchant statement will tell you, okay, this is what they're getting in sales. This is actually what they're receiving in funds, and this is the percentage that they're taking out. I would also like to know the merchant account contracts. I want to find out what is a contract like, and I get copies of those. Credit card statements, if they're using the credit card to pay for expenses, I like to get the credit card as well. That'll tell me how the business is paying for expenses. Another item that I would like to ask for is for the insurance policies for the business, workers' compensation, any type of general liability insurance, any insurance that they have. And that's for the financial aspect. Again, this is kind of a good list to work with. My due diligence checklist has more comprehensive items, but this gives you an idea how important it is to ask these items, for these items. I would also like to ask for vendor agreements. If the business has vendors, whether it's independent contractors, whether it's an accounting firm, legal firm, somebody who comes in and cleans the windows, for example, any vendor that does services to that business, if they have a contract, I like to get a copy of that contract. It's part of the due diligence to find out, what are the obligations. I like to know whether they're current with those vendors. Do they owe them any money? Any client agreements that they have. And they might have a business that they don't have contracts with specific with clients. That's fine, but I would ask if you have client agreements. I like to know what are those contracts like. And I'll give you an example. If you have a pool service company, for example, that goes every month to services pools, like you have here in South Florida. So I like to know, okay, that contract is for an entire year. Is it cancelable every 30 days, 30 days notice? And what is the turnover on those clients? I like to say the history of past and current clients. I'm going to find out those contracts. Is the seller keeping those clients, and what is the history of those clients? And that's what you're going to be buying. You're going to buy that goodwill. You're going to be you're going to pay some money to get that book of business to you so you can continue generating that cash flow. So I like to know that. And also what type of work is owed to those clients for the money that already has been paid. So that's part of the client agreement. Lease agreements, very important. If you have if the business seller does not own the building, most likely there will be a lease agreement involved. So I like to know from that lease, when is the lease up? When it's for renewal? When does it expire? Is it assignable? Most of them are. However, it requires landlord consent. We talked about that previously, that if you're going to be into a lease, do not fall for the story that say, okay, you can pay me, the landlord does not have to know. That is false. That can get into a lot of trouble, and I've seen situations that get into a really bad legal situation where people do that. Say, I'll basically, you're going to be my subtenant, I'll sell you the business, you pay me, I'll pay the landlord. Doesn't work that way. If you have the lease agreement, you need to have a copy of that. Employment agreements. If you have any type of agreement with employees and independent contractors, we need to have a copy of that. And just want to put it aside regarding independent contractors. And I did an episode on that just a few months ago, that there's a new independent contractor rule by the Department of Labor, and now it's more difficult to classify someone working for you as an independent contractor and pay them as a 1099, quote unquote. So there's no such thing as 1099 employees. They're employees or independent contractors. So if you have a question, go back to that episode, and I might revisit that topic at some point. Or if you have a specific question, talk to an attorney that knows this and can guide you. Because the last thing you want to do is have an employee working for you. You're paying them, quote unquote, as a 1099 because they ask you to. The person gets into an accident and while working, you have no workers' compensation insurance. And guess what? You're going to get sued for that particular injury because you should have had workers' comp insurance and they're an employee. And then you might have a suit for overtime pay as well. So I do not recommend taking that shortcut. It can come back to haunt you, and I've seen situations that it can really have ended up bad for clients. I would like to know whether they have any trademarks or patents, because those will be transferred to you as well. I'd like to know whether or not they have all the social media accounts, TikTok, Twitter, Facebook, Instagram, name it. Anything that they use that business using for social media is going to be transferred to you. All the domain names as well. All the emails that are used for the business will be transferred to you as well. So I'd like to have a list of those and how they're being used, so you can go and check them out. And in fact, you should check that out as well, because it's available. And that goes also into the Google My Business account. That's very important, because that's the location of your business in Google, and you're going to be taking that over as well. Look at the reviews that is available. Customer list, very unlikely that before you buy the business, you're going to be given access to the entire customer list for you to look at. That's what you're buying, and in the case the deal falls through, which they do sometimes, they're not going to give you access to that, and that's fair. But there are ways that you can actually have that information be reviewed without actually disclosing that information. They can have the number of types of clients they have, when the clients were acquired, which clients dropped off, the average revenue per client. There's certain things you can do. You can have a block. They can cross them out, the names, but give you some other history. Or you can have a third party look at it and give you a report without disclosing the content. There are many ways that can be worked out. But find out about who are the customers, where they're coming from, how often, who are the repeat customers, what is the percentage in the average sale for each customer, so that way you have an idea when you buy the business, this is what I can expect. I'd like to go find out more about litigation history or demand letters. As attorneys, we have access to a lot of databases. In our office, we have access to a database that allows us to search anyone for any lawsuit they have all over the country. Not everybody has that, but we have it. So we do that as part of due diligence. We check all the databases to make sure to see if there's any type of undisclosed lawsuits that we can find out and ask questions about those. What we're not going to be able to find out is arbitration and any demand letters that they might have received. Those are not in the public record. So we asked, are you in the process of arbitration? Have you had any arbitration in the last 5 years? Do you have have you received any demand letters from anyone? So we asked that question as well. Last but not least, I'd like to ask about loan agreements. Any loan agreements they have, whether it's SBA, private loans, any type of merchant loans, any type of loans that they have, we need to know, and how those loans are going to be handled at the closing. What you want to have is that the loans are paid off at closing from the closing proceeds. You do not want to have those loans open and say, don't worry, when I get the money, I'm going to pay them later. No. Those loans have to be satisfied at closing. From the closing proceeds, you don't want that loan to be following you, even though you bought the assets after you close. So this is kind of a short, compressed, topic on due diligence. I hope it was helpful to you. Again, if you have any questions, welcome to send me an email at rich@richsierra.com. If you'd like me to go over any topics any legal questions you'd like me to go over in the show, send me an email again. And if I select your question, I'll send you a free copy of my book, Business SOS, 8 Common Legal Mistakes Business Owners Make and How to Avoid Them, which is available on Amazon, Barnes & Noble. You can ask for your local bookstores as well. If you want to learn more about our legal services, our website is floridasmallbusinesslegalcenter.com. Again, it's floridasmallbusinesslegalcenter.com. We're on Facebook at FSB Legal. You want to watch the video of this podcast, you can go to youtube.com/@RichardSierra. You can follow us at Instagram at FSB Legal. If you want to give us a call, the number is 866-842-5202. If you like the podcast, please follow us, give us a review. Certainly appreciate that. Share with your friends. We're available on, obviously, Apple Podcasts, Spotify, wherever you enjoy your shows. Until next week, this is Rich Sierra. Remember that my goal is to help you succeed.